good afternoon to all our viewers. You're watching Countdown right here on Bloomberg Quint. The boundless grip of the bears is keeping investors on edge, and this is the theme that we are tracking this afternoon. Let's quickly run you through the headlines of the day. The market slide to the lowest point of the day, led by financials. The realty index is the top sectoral loser. There seems to be no respite to the NBFCs. Both Indiabulls Housing and Diwan Housing are seeing double-digit losses. RNFS files an application with the NCLT seeking a stay on insolvency proceedings against itself and 40 subsidiaries, citing a scheme of arrangement under the Companies Act. And Yes Bank falls to a 2.5-year low ahead of the board meeting today. The stock saw a sharp fall in intraday trade. And oil prices continue to hover around a 4-year high after OPEC stops short of increasing supply at its recent meeting. But more to be tracked, and we've got a lot to watch out for on the index. Neeraj, good afternoon.
Good afternoon, Devina, and good afternoon, viewers as well. Well, the trading in or around the lowest point of the day, about 0.5% off for the Nifty. So around that lowest point of the day for the day today. The Nifty Bank, while it's recovered a little bit, I presume, from the very extreme lows. So right here, bobbing between those levels, but still about 0.7% off, and led predominantly by Yes Bank and a couple of other financial names which are continuing to roll under pressure. By the way, the mid caps and the small caps should come up on your screen just momentarily before we get to the heat map. And look at the pressure here, 2% down for the small caps, about 1.5% for the mid caps as well. So the pressure is there, and it's ominous, to be honest. Let's quickly look at what's happening to the heat map and what individual names are doing. Yes Bank, Indiabulls Housing Finance amongst the top two losers. Adani Port the last few days has been dragged into this as well in terms of the price cuts that we've seen on the stock. Today, the steel names too, the likes of Tata Steel, for example, down about 4.5% today. Oil marketing companies and upstream companies, both of them have pulled back because Reliance is down about a couple of percentage points. And we're also seeing stocks like IOC, BP, HP also faring slightly poorly. What's done well? Well, the export theme, so Cipla, IT and pharma essentially. So the gainers include a Cipla, Infosys, Dr. Reddy's, Sun Pharma, HCL Tech. Now you know where the strength is. HUL is recovering a little bit from the lows, and Maruti Suzuki is up about 1.5%. Some buying out there, but by and large, weakness on the screen, financials and rate sensitives leading the way. Is it the same in the mid caps, Devina?
Well, absolutely, Neeraj. I mean, if you see, it's a reflection of what you're seeing on the large caps and the kind of pain points that we're finding out on the mid cap space as well. So looking at the likes of Diwan Housing Finance, a quick look at how that's been performing. That's down 30% in intraday trade. A Groove Finance and an L&T Finance. So the pain actually percolates down to individual names over the last 3 or 4 days. Again, if you see, some money that's gone into the defensive space, Apollo Hospital, which is up about 1%. You've got Biocon, which is up 3%. But remember, this is still lower than what it was just an hour back. Wockhardt was in the green. So if you've seen, there's been a cut that's come in just in the last few minutes of trade, where some money has been pulled out from Wockhardt as well. Sugar as a pocket seems to be a slightly better play in today's session. So you've got Bajaj Hindustan, Dhampur Sugar, Uttam Sugar Mills. So these are the names that have seen some gains in today's session. 5, 4 and 2% moderation in terms of the price activity. Volume buzzers in today's session, the Indiabulls Real Estate, the real estate counter and the real estate index is witnessing heavy pressure. Indiabulls Real Estate down 18%, and you've got almost 1 crore shares being traded in terms of the volume activity. All these cuts are coming on the back of heavy volumes. The Canfin Homes 10% down, 25 lakh shares traded. Jet Airways is down 9% now. Last I checked was down 6%, so the pain has exaggerated in the counter, and closer to about 54 lakh shares have been traded on that one. So high volume and lower pricing activity. That's not a very good combination. But lots more to watch out for from the futures and options space. Remember, this is expiry week, so you're going to keep all eyes out for those rollover numbers that come in and individual stocks and how they're performing. Agam joins in for that. Agam, good afternoon.
Good afternoon, Devina. Well, for the second straight day, what we're actually looking at is Nifty remaining below the 11,000 mark. Today is a day where we're just going to have to wait and watch whether or not there is substantial unwinding in the 11,000 put. But I'm going to start off with the rollovers at 23%. This is slightly lower than the previous 3-month average of around 25%, with 2 sessions left to go. I'm going to have to wait for the power copy to come through later on in the evening. But as things suggest, rollovers are relatively low. A lot of traders are hesitant to carry their positions forward into the next series. But let's take the Nifty banking rollovers too. And when it comes to the Nifty banking rollovers, that's the same at around 22%, not too much to speak for. October series sees an increase, not too much to speak for when it comes to September series. But the India Volatility Index is on the rise. It has been for quite a while, and it is moving up by as much as 1.2%. It hasn't shown as much momentum as what we've seen over the previous few days, but still about the mark of 17.5, and that can be concerning for a lot of traders who are long in the markets. That said, let's take a look at some of the stocks. And you guys have mentioned Indiabulls Housing Finance. Okay, before that, when it comes to changes in open interest, it is the 11,000 mark, and you're seeing more and more writing. And as I was suggesting, you're starting to see a lot of unwinding around the 11,000 put. So that can be concerning, considering we are starting to see resistance build at 11,000 and 11,100 levels. But that said, now let's take a look at the stocks. As you guys were mentioning, Indiabulls Housing Finance, that is seeing an increase in open interest in the September futures itself, which means that the next few days could be more troublesome when it comes to Indiabulls Housing Finance. Yes Bank, this one has taken a knock, and it's actually turned for the worse in the last 1 hour of trade. And once again, that's seeing a lot of shorts building in there as well. Dewan Housing Finance, it did see a little bit of recovery yesterday, but we're seeing a complete reversal and even deeper cuts today. Another 31% decline today, so shorts there as well. And Tata Steel is now starting to see some weakness coming in through, despite the fact that we did see some strength in the metal indices yesterday. Tata Steel on the decline, and we're starting to see some fresh shorts. So, well, concerns all around, and it's not just the financial sector.
All right, Agam, thanks very much for that. So that's a quick wrap up on what's been happening in the futures and options space. And Neeraj, we've been laying a lot of emphasis on that 11,000 mark, because that's a key support area because of the kind of put build up we've been seeing there. And if that gets taken down, then it's a free fall till 10,800, because in between you're not going to see too much of a support or a build-up that's coming in from the options activity. So there is some amount of put writing, but that's at 10,800. So you have another 200 points to be given up if it does actually come down to that.
Let's wait and watch. But what's impacting the markets today? Well, a bunch of factors, including, I believe, the macros, crude, and the resultant impact on the currency as well.
With Brent crude actually now hitting its highest since November 2014 on the back of sanction restricting Iranian crude exports and tightening of global supply. The OPEC, or the Organization of Petroleum Exporting Countries, as well as top producer Russia, are discussing raising output to counter falling supply from Iran, although no decision has been made yet. We will be talking about these crude oil prices and whether or not they'll be stoked further, and what does it mean for domestic macros. Upasna Bharadwaj, economist at Kotak Mahindra Bank, is joining in right now. Upasna, thanks very much for taking out the time. What do you make out of these levels of crude? And now there's chatter of crude going all the way up until 90.
Yes, clearly. I think, we need to be really watchful on the levels of crude. The fast pace with which we are, breaching 80 and then probably now moving towards 85, that's going to become even more a challenge for India specifically, given the kind of dependency that India has on oil imports rather. And one thing is there, of course, as we approach November 3rd deadline for the Iran sanctions, this kind of volatility in crude oil prices is likely to persist unless we see some kind of a different, verbal intervention by the OPEC and the allied, producers, which in the recent meeting, nothing really concrete came out of, and hence markets have reacted negatively to that. So clearly in the next 2 to 3 months, the supply-demand mismatch is likely to keep the pressure on crude intact, which obviously is not a good news for India. And the oil imports, or the monthly oil imports, if we were to look at from a FY18 perspective, that was broadly in terms of it was around $9 billion. That's closer to $12 to $13 billion currently. So we are seeing that pressure on current account deficit, which is already building up. Apart from that, of course, we have other reasons to worry about, because it's not only about oil. The current account deficit is widening also because there is a structural the demand side pressures, because India is growing pretty fast, and that is causing increased discretionary demand. Especially I'm talking about electronics, which has seen a huge surge in imports in the last 2 years. Now that increasing trend is something which is also extremely important to address, and we are expecting some kind of measures, but of course the measures could be in the form of tariffs, which probably may not be the right thing, but yes, in the near term that's the best way out for the time being to curb discretionary demand. However, having said that, I think from a little more medium to long-term perspective, the focus on manufacturing base, specifically for the goods and the sectors that cannot be produced domestically, that needs to be really ramped up. And that is the focus I'm looking for, a roadmap which should probably be provided to ensure that there is a much wider focus on building the manufacturing base for things like electronics, which are becoming a problem for the current account sector. So I think all in all, yes, there is an issue for the external sector, especially in this volatile market, because the financing of the current account is also equally important, and that is also remaining, that's also not providing any comfort, because if you look at the kind of pressure that is building up, the current account deficit is expected to be close to $80 billion, of which about $35 billion could be possibly met by FDI, but the balance, $45 to $50 billion, is the kind of gap which has to be met by volatile components of capital. That remains to be, that remains quite a worrying trend. And
sure.
Yeah.
No, Upasna, sorry, just a minute, and we'll come back to this as well. But just some flashes on your screen, and I don't know which way to look at this, whether to look at it positively or negatively. LIC chairman saying we'll try our best not to let IL&FS fail. Now, does this mean that LIC is saying that they'll put in, of course it means that LIC will put in all the best to come to the rescue, but are they saying that the situation is so dire that unless this happens, IL&FS is sure to fail? And, so two ways of looking at it, but this should be viewed as well, I don't know honestly how to view it. I think a number of voices have said that why is it that LIC's money gets put in to salvage all the situations? The counter to that is, what options does the government have?
Yeah, exactly. But there is chatter from government corners, and we had been talking about how they're pretty strong on the fact that IL&FS has to probably come out of this mess using its own assets rather than getting bailouts from PSUs.
Which they are doing.
Yeah.
The Bloomberg News story support.
Yeah. So there is interest for their assets, 14 out of 25 of their assets. So, while they are taking their own measures, let's see whether or not it is LIC finally that does the deed for it.
Yep, let's wait and watch. Upasna, just one question from my and a quick one at that. How serious, to your mind, is the bond situation? Because while we're seeing the funding costs likely to get tightened for the NBFCs, one, because of the ALM mismatch, two, because of the likelihood of the RBI uptick coming in not just in October but going ahead as well. Any thoughts on this situation?
Well, I think there are two parts to this. The recent liquidity squeeze that has happened in the NBFC space that we're talking about, that it may be just a little too early to really comment whether this is going to be deep enough or it will be tackled soon. So I'm not sure whether this is really a structural problem yet. But in general, I think there is already a liquidity, structural deficit in the liquidity in the banking system, which was expected to really worsen in second half of the year, given that there is a seasonality that we tend to see every year. So the second half of the year, we were any case expecting that the currency in circulation is going to tighten. There is FX intervention, because unlike every other year when we've mostly seen balance of payment surplus, this year it's a deficit scenario. So there is a pressure in terms of the spot intervention, which is also sucking out liquidity. The government, which has spent significantly in the first half of the year, is now likely to start building up cash balances. So all in all, we were any case looking at the tightness in liquidity to begin from September second half of the year, and that's exactly what's started happening. So I think one is this NBFC issue, which along with the fact that there is a systemic banking system liquidity deficit, it's just probably worsening the scenario, and the short-term rates are likely to remain, are likely to harden significantly on that account as well. Having said that, I think somewhere we do expect that RBI will, on a much more persistent basis, continue to provide primary liquidity through OMO purchases. We've already seen back-to-back 2 OMO purchases being announced in the last 2 weeks, and I think this should continue in the next few months, especially at least 3 to 4 months, in order to try and bridge the kind of a huge hole that is created, and this is something which is structural. This is a requirement to ensure that the economic activity does not get hampered. So I think all in all, yes, there is absolutely a need for primary liquidity infusion, and I think RBI will be vigilant on that front and will continue to try and support the shorter end of the curve to that extent. Having said that, there's a limit to which the OMO purchases will be conducted, and even if we are looking at a close to a 2 lakh crore of OMO purchases in this year, despite that, I think liquidity will remain on the tighter side, which means that the pressure on the shorter end of the curve will still remain.
All right. Upasna, we leave it at that. I appreciate you joining in and sharing your views on various topics out there, including oil, what's been happening. And remember, like she said, RBI has already seen open market operations to the tune of about 30,000 crores. On Thursday, there's another 10,000 crores scheduled to be purchased in terms of their government bonds. But let's see whether or not they actually go ahead and how much is that quantum.
Yeah. Well, let's wait and watch what happens there. The conversation with Upasna, though, started off with crude prices, and while those oil prices will hurt the macros, they've also sent diesel prices going through the roof in India. Quite frankly, petrol prices too, trust me on that. But the diesel, remember, forms about 50-55% of the total operating costs of transporters. How is this going to impact business? Let's pose that question to Vineet Agarwal. He's the Managing Director of Transport Corporation of India, joins us right now on the show. Vineet, good having you. Thanks so much for joining in. We may not have seen the end of the rise if indeed the OPEC wishes or otherwise is to be believed. Are there already visible impacts that have come into even well-managed corporations like yours, or some of the smaller corporations which will actually face a higher brunt, to my mind?
Yeah, so several things happened. Thanks for having me on. On the input side, several things are going up. Of course, fuel prices are one of the things, but there's also diesel, the lubricant prices are up, the tire prices are up, driver wages are up, toll is up, even truck chassis prices are up. So that's the impact on the input side. On the output side, of course, there are some benefits that have come in with higher purchases of CVs across the country because of lower interest rates in the past year or two. And that was part of the replacement cycle as well. Then this new axle load increase that has happened, that has helped. So all of that has sort of created a sort of an imbalance in the market where demand and supply across certain sectors have been very robust, which has led to increases in freight prices. But in some cases, it has not been that good. Also, it's been seasonal because this is typically the monsoon period where, seasonality, like from the south, mangoes start moving. So freight rates from ex-south tends to move up and so on. But company like ours is not really, we work on more on the value-added side, so we don't own many of our trucks. We own only about 15-20% of our requirements. So for us, that impact is very minimal. But I can understand that companies which have a higher fleet will certainly get hit because they're not able to pass on this increase right away.
So are you able to pass it on?
Yes, so most of our contracts have a built-in clause which has fuel as a percentage of total value, and there itself we have triggers. So let's say if the fuel prices go up by 5%, then it starts a trigger to really start asking for a rate increase. Now for us there's sometimes a lag, let's say that trigger is reached on the 20th of the month. Sometimes the customers might say do it from the 1st of next month. So there is lag sometimes, but mostly we are able to pass it on.
Is there a bigger pressure because of the currency depreciation also for you?
I'm sorry, I missed that question.
I was asking you about pressures from the currency, the rupee depreciation. Are you facing that as well in terms of cost challenges?
No, not so much. Again, as a fleet, as a percentage is not that high for us, so it doesn't impact us that much.
Interesting.
All right, just one, in terms of the overall cost for you, are you seeing that consistently, stepping up in terms of, because we're not going to, we don't have any vision of crude oil prices coming off sharply in the near term. The currency depreciation, has been taking its toll on various companies, but you said for yourself it's not that much of a challenge. But going forward into the next few quarters and by the end of the fiscal, do you see the cost significantly ballooning for yourself, or you are comfortable in terms of curtailing it?
Well, cost structures in India in an inflationary economy will continue to rise, be it not just all the things that we just discussed, but also people costs and other ancillary costs. So that's always going to be a challenge. For us, we've been able to counter that by continuously value adding. So not just doing the basic transport work, but doing things like warehousing or supply chain management, or even to that extent, things like shipping helps us to diversify our cost structures. So for us, that impact is not that high, but yes, it is a challenge, and I think the next 2, 3, 4 quarters, this will continue to remain a challenge for the industry as a whole.
Vineet, just two questions. One is an update and one is a hypothetical question. If oil prices were to inch up another 10% from the current levels, which is about the midway point from where people of what people anticipate to do, so say about $90 a barrel, what kind of business impact could come in for you? And one is you have an integrated business, a lot larger a size, and therefore maybe the economies of scale much better for you. What about some of the smaller transport companies as well? How bad an impact could this be?
Right. So, I think everything depends upon how the demand structure works. If demand is high in the economy is generally doing well, a lot of things get taken care by itself. So, in today's scenario, I see demand to be quite robust across sectors. We've seen some, even the engineering sectors, and of course the consumption sector growth is quite high. So I think at least till the elections, these things are quite well taken care of. The festival season is coming up, and I'm seeing that the demand has increased even more because there's a stocking that's happening. For example, even in places like Kerala, which really missed the Onam season, we are now seeing that the demand is getting built up, not just for this festival season, but even for Christmas. So, which is quite unusual, which has not happened in the past. So the demand side equation is decent. On the supply side, of course, with now truck axle weight going up, that is more weight can be carried per truck. That should help certain types of transporters. However, with fuel prices going up in the scenario, the hypothetical question you're saying, it will have an impact on the smaller transporters because they are not able to pass on these increases right away. There is a certain amount of lag. Also, the second impact will be increasing interest rates. So when that starts to happen, we'll see demand also starts to come down a little bit. The third impact that's going to be there, which is actually neutral, is the fact that by 2020, the BS6 norms are coming for trucks, which means that there could be a lot of pre-buying that could happen before 2020, which essentially means that more capacity will get created, and hence it could help keep that cost structure under control.
Just one last question, Mr. Agarwal, before we let you go. Was there any significant impact on your business operations, particularly with respect to the floods in Kerala, and will that show up in the results that are upcoming?
No, there's no impact on business. Of course, things got pushed back a bit. We lost a little bit business at that time, but it all sort of makes up. We catch up at that point. As you understand that Kerala is more of a consumption state. It's not a production state. So deliveries to Kerala, of course, came down during that 15-day, 20-day period, but they're now coming back to normal.
Got that. Mr. Agarwal, I appreciate you taking out the time and speaking with us. Thanks very much for joining us on Bloomberg Quint.
Well, that's TCI saying that the crude price uptick may not have had that big an impact. Now, for IL&FS, and that's the big story. You just heard the LIC chairman say that they'll try their best not to let IL&FS fail. It sought protection for itself and 40 group companies from the insolvency process as well, citing a scheme of arrangement under the Companies Act. Minka Doshi now joins us for more on this. Minka, good afternoon. We saw you do the show as well. The key takeaways from there, and what do you think is the way ahead?
Okay, so I think just to clarify, what IL&FS has disclosed to the stock exchanges is that it's filed for a scheme of arrangement under the Companies Act for itself and 40 subsidiaries. It has not offered any more information except to list those 40 subsidiaries, many of which are key IL&FS subsidiary businesses like the transportation company or the urban infrastructure company, and several subsidiaries under that. So that's the news so far. Now, I think they've opted this route because there were only two, well, actually, technically, this was the only option confronting them. Had the FRDI bill been passed, the FRDI bill had a specific provision in it for the resolution of financial services firms. Now, IL&FS is unique because it's a core investment company, which is a non-banking financial company of sorts, systemically important and non-deposit taking. It does not come under the provisions of the IBC or the Insolvency and Bankruptcy Code because the IBC does not provide for the resolution of financial services firms. That's very clear in the IBC code itself. So unless the government had, under a provision of the IBC, issued a special notification saying IL&FS can be resolved under the IBC, there was no scope for IL&FS to be resolved under the IBC as the law stands today. So no FRDI because that bill never got passed, no IBC because unless the government notification doesn't happen, they don't technically qualify under it, which left it with the Companies Act solution, which is what they've picked today, which is a scheme of arrangement, which in the simplest of terms I can explain to be a scheme of reorganization of financial affairs. That's the simplest way I can put it for you. Now, the big plus of a scheme is that it has considerable flexibility. You can, within the scheme, they will be able to include capital or additional fundraising, that is if LIC and other shareholders decide to do a rights issue, asset monetization, which is to sell some, prized assets to be able to again raise money, and debt restructuring. In fact, a scheme allows explicitly for debt restructuring, except that it needs for the approval of 75% of the secured creditors of such a debt restructuring plan. A scheme will need approval of creditors, shareholders, and eventually the National Company Law Tribunal, because the tribunal administers the scheme. So they've used the scheme route, it seems. There are some drawbacks to the scheme. For instance, IBC has fixed timelines, as we've all discussed over the last several months. There are no fixed timelines in a scheme. IBC has a standstill or a moratorium. There are no standstills or moratoriums under a scheme. They can be provided for in the scheme, but there's no explicit provision for them like the IBC has, right? There are a couple of other things, like for instance, the IBC would override any other law. That's specifically provided for in the IBC. A scheme does not override every other law, so there could be the interplay of income tax laws, etc., etc. We don't know how it will proceed from here on, but we can only expect that the government will cooperate because it's in everybody's interest to bring this, cooperation back on track. I can go on and on about the legalities of schemes, but I think it's enough for viewers to understand this is the route that IL&FS seems to have picked at this time as the possible route back to solvency. This is the first step on that route, and literally only just the first step. We have to yet see the details of the scheme, see what the various elements of the scheme are, then see what kind of approvals they get from creditors and shareholders. These are all the various steps. The final step will be the NCLT approval. None of this is going to happen over the next day or week. It's going to take several months to play out, so we'll watch as it plays out.
So, is there any implication because the court had put a stay order on NCLT proceedings for most of the banks, and for the 180-day resolve, they had put a stay order. So, does that affect this in any case?
I'm not sure what you're referring to. I don't know. There was some news that that IL&FS had sought to ensure that no insolvency proceedings could be made against it under any IBC provision. But like I've explained to you, the IBC would not technically apply to IL&FS. So I think by using this, they've made it very clear this is the route we're going to go down. And I don't think now it leaves any scope for anybody to be able to move the IBC. You could technically move the IBC for some of the subsidiaries under ILNFS if they've defaulted on a payment, because those subsidiaries would not necessarily amount to being a financial services firm. For instance, the transportation subsidiary, etc. But they would have had to default, and therefore you would have had to have a creditor go to court. But I suppose in trying to do this scheme route, they're trying to block everything else, because otherwise you could have had multiple such insolvency proceedings going on. Really, I think they need to find some orderly way to resolve this, because a holding company with more than 100 subsidiaries and joint ventures, etc., it could get terribly messy if every creditor, including operational creditors, stood up and said, hey, I'm going to go to IBC to see what I can extract from this process, right? So I suppose the scheme is designed to be able to try and do that. How much success it has, we don't know. But we did discuss this in the morning. I think fortuitously, just before ILNFS made the announcement, we had on a couple of experts to discuss the pros and cons of IBC versus the scheme, and listen in to what M.R. Umarji, the former legal advisor to the Indian Banks Association, had to say about using the scheme route.
In my view, the process of making a scheme of arrangement under company law will have a lot of flexibility available to the authorities who are formulating such a arrangement. We will not be restricted by various provisions of the Insolvency Code, the time limits prescribed, the various other provisions which regulate the entire system of formulating a resolution plan. In a scheme of arrangement under the company law, the regulators who are regulating this particular entity can come together, set up some committee or some other authority to look at the overall working of the holding company and all the subsidiaries and formulate a scheme which is applicable to all. And since no time limits are applicable, it could be done in a phased manner. It could be done sector-wise. First you deal with power projects, then you deal with other financial services or other activities undertaken by the company, and work out the entire scheme with the help of the regulatory authorities who are regulating ILFS. And it would be easier to do it because they will not be constrained by any statutory provisions restricting various steps which are required to be taken. It will be governed by the company law.
Well, IC Chairman V.K. Sharma also told reporters that the majority shareholder will not let the ILFS group fail.
We will all try to see that it does not collapse.
As short and sweet as it could be, but there's just a reaffirmation of the flash that was there on your screen some time back, that LIC will do everything possible to ensure that ILNFS does not fail. Okay, let's bring in our experts now. Full tilt for the markets for the next 54 minutes left of trade. We have recovered a little bit, I must say, from the lows of the day. The Sensex, in fact, is in the green. The Nifty Bank, more importantly, is also wedged its way back into the green. And the Nifty trying to head closer to the 11,000 mark. Sameet Chavan of Angel Broking with us on the show with his thoughts, as is Sacchitanand Uttekar of Tradebulls. In moments from now, we'll also get in Avinash Gorakshakar for his thoughts on the fundamentals. But gentlemen, Sameet and Sacchitanand, thank you so much for joining in. Sameet, I want to start off with you. How crucial would it be for the Nifty to end in or around the 11,000 mark? Because until now, we're seeing the 11,000 put option hold steady. The open interest out there holds steady, and most people believe or fear that if we were to head lower, then the unwinding could actually push us further. So how crucial would it be to hold these levels, and what is your index strategy for the afternoon?
Good afternoon, Niranj. Yes, 11,000 holds a key level for the index. There has been a tussle going around. If you see 11,000 put options, 10,900, 10,800, they have been adding a good amount of open interest in those strikes. So at the same time, if you see 11,000 call option, that is also attracting some kind of strong open interest. So there's a tussle going around. If you see some kind of if you have to see any kind of pullback in the market, then Nifty has to sustain above 11,000 first, and if that happens, then you could see a good relief move at least towards say 11,080, 11,100. But directionally speaking, 11,150, 11,200 would act as a very strong resistance, and on the low side 10,800, 10,700, these are the next immediate support, major supports to watch out for. So at this juncture, if we have to play out for this expiry, then we would rather play the index via options, 11,000 call option, which is trading around 60-62 bucks right now. So one can take a punt by going long in this strike price by keeping a strict stop loss around 28, and if Nifty manages to close above 11,000, we could see a decent appreciation in this strike price. So our immediate target for this strike price would be around 122.
What are the stocks that you're looking at this afternoon?
We have two recommendations. Both would be on the long side. Maruti, which has been a laggard since last many weeks. It has corrected significantly and has now reached its important support level. So from here on, we are expecting some kind of bounce back. And as a disclosure, we had recommended 7,800 call option to our clients as well in the morning, which is seeing some kind of unwinding. So we expect some kind of short covering moves in Maruti. So our immediate target for Maruti would be around 8050, 8080. So it can be bought with a stop loss of 7760. Another buy call would be on Vedanta. Clearly, this has been one of the outperforming stocks in the recent correction. The stock has been consolidating and has not participated in this correction. So we would expect this stock to continue its outperformance. We expect a breakout to happen soon beyond 235, 236. So with an anticipation of this move, it is offering a low risk buy with a stop loss of 225 and target would be around 239.
All right, Sacchitanand, let's take your call on the index.
Well, good afternoon. In fact, we have already seen a straight decline, especially in Bank Nifty for the last 7 trading sessions. One point that I would like to highlight is the placement of the daily RSI. It is quoting somewhere close to 20 now, and it has slipped below 19. So, these are the levels which were witnessed in 2016 during the fag end of the fall. So probably, the market is sensing that there is an immediate support which could be established soon, and probably, some kind of a relief or a bounce back may play out from here on. But if you look at the price structure itself, the price structure has been weak, and we have really not seen any kind of a reversal formation yet. So on that note, we would like to play this particular move on a conditional basis in case if Bank Nifty starts trading above say 25,255 and starts sustaining above it, then probably we may see a headroom getting open right up to say 25,500, 25,550 kind of a level. So on that note, it will be a conditional buy about 25,255, keeping a stop loss somewhere close to 25,130, and expecting a move or a short covering or a bounce back towards say 25,530.
All right, that's a conditional buy call though, and it's still 500 points off that buy price. You've got a buy on United Spirits and a sell on PNB. Sacchitanand? All right, I don't think he can hear my voice, so we'll try and patch that line and get his ideas. But he's recommending a buy on a United Spirits and a sell on PNB. Let's bring in Avinash Gorakshakar. He's here with us in the studios. Avinash, the pain just gets more painful. But today, though, we have seen a prop up from the lows of the day. In fact, moving into the green now on the indices. Do you see this as, a pause right now in the kind of downfall that we've seen, and it probably is too early to start rejoicing from this move?
No, I think Devina, clearly in the coming 2 to 3 days, I think markets would clearly look at 2-3 events. That is the Fed meeting, we have the F&O expiry, and I think unless and until we see the second quarter numbers coming out, I don't think the markets are going to go up in a hurry. I think there could be specific stocks, possibly some value buying could come in, but overall I think the mood in the market is that one would prefer to wait and watch. I think with the rupee hitting a high of 72 and a half, the Brent crude above $82 a barrel, I would believe that at these levels, I think it obviously would definitely require a lot of nerves of steel to actually go out and buy. I would believe that it's better to wait for the Q2 numbers to roll out. But yes, there are some stocks which could possibly look as good value buys. We have been recommending our clients to look at consumption themes like say a Radico Khaitan, construction companies like say an ITD Cement. Our sense is these are companies which would definitely generate good value, but over the longer term. I think in the near term, you could see these stocks underperforming, but longer term, these companies have good balance sheets, strong earnings growth trajectory potential. So I think all said and done, I think it's only a matter of time.
Interesting. Hold on to that thought. I want to talk about some specifics as well. But Sacchitanand, if you can hear me now, we still haven't taken your stock recommendations. What are you recommending today?
Well, we have a combo of long and short. If you look at United Spirits, the daily structure has been weak. But if you look at the structure from May 2018, we have seen that the stock has been oscillating down within a downward sloping channel. And right now it is placed at the bottom of this particular pattern itself. So keeping a stop loss close to 505, long positions can be added here around 520. We are expecting that there could be a sharp up move, in the coming days towards say 565 and extend up to 595. So probably from a positional perspective, it looks like a very good scenario. Long positions can be added in United Spirits. On the short side, PNB is one particular stock, which has been on the selling radar for a lot of traders. And this particular stock has, opened below its critical support levels, and it has been slipping below the 69 levels. So what we are expecting is that this particular phenomena can continue. The bearish mode could continue right up to 57, and probably your stop loss can be placed around 67.60, and short positions can be still initiated in PNB.
Okay. Yeah, interesting. Okay, it's PNB. I'm just looking at Jet. I'm listening. Whatever I hear, it's revolving around Jet Airways, because that stock. Remember, in the pre-open session, it was down about 11%, and we were saying, it may not be that bad. Yeah. Then it started off flattish, but it's down 11% now. And on fairly high volumes, I think the AVAT will show you that despite the fact that the average volumes for Jet have gone up, today's volumes at 7.5 million shares would probably be higher than what the 20-day average volumes are. 191 and counting. Look at that. The volumes have inched up, but today's volumes higher than what the average volumes are. And 191, who would have thought of this happening? Crude being, and I don't think the other aviation stocks have done this. Interglobe Aviation could be down, SpiceJet could be down, but they're not cracking as badly as Jet Airways is. This is being taken to the cleaners. These are 52-week lows, maybe multi-year lows for Jet Airways.
From a price of 500, 540, for it to now come down to 190, I mean, this is a clear example of something which is waiting to find its bottom but not being able to succeed at that. Volumes of 7.77 million in today's session on a price cut of 10%. Avinash, what should one do if they have this stock?
No, I think clearly the rupee as well as the crude, I think is going to hit Jet quite badly, and I think the markets are looking at one of the large, loss in the second quarter also. I think clearly, with a 1,000 crore loss, Devina, in the first quarter, the markets were clearly disappointed. Our sense is that Jet could possibly be one of the significant underperformers in the aviation space. I think clearly, unless the management actually does some sort of debt restructuring and does some sort of asset sell-off, the markets are not going to get any comfort, considering the fact that earnings growth is now going to be absent at least for the next 2 to 3 quarters.
That's Jet Airways for you. Divan Housing Finance is now down 26%, followed by Indiabulls Real Estate, which is down 17%, which takes Divan Housing Finance 7-day tally to 52% knocked out. Indian Bank, Jet Airways, we just spoke about that one. Vakrangi is down about 10%. So the cuts just keep getting deeper and deeper. In fact, just to pull up Divan Housing Finance and its scorecard, just yet, along with that, and Indiabulls Housing Finance, which has seen an extremely sharp cut in today's session. That's Divan Housing Finance for you. 3 months, 6 months, 9 months, 12 months, and you can see double digit, but the ferocity of the sell-off has just been unimaginable. Indiabulls Housing Finance, that's the second one, that seems to be, on the downside, a 70, closer to 24% cut over the last 12 months. And much of the pain has come over the last 2 days, actually, 900 on the stock. Which is why it's so consistent over the time frames, because the large portion of the cut has only happened in the last few days. What does one, I understand Divan Housing is a difficult one to call on, Sameet, but in Indiabulls Housing Finance, 3 days on a trot now, it's fallen 8.5%, 9% apiece. Do you do something here, or do you just shy away from it because it's just a very risky stock to trade?
Yes, Neeraj. I don't want to be a brave heart trading in such kind of counters. This is typically kind of pattern. Once the stock has a dent of nearly 30-40% in a day, and then they continue to outperform at least for next few months. So similar sort of scenario we witnessed a few months back in PC Jewelers also. One fine day the stock corrected 40-50% in a day, minor bounce back. So that is what we saw in DHFL as well yesterday. It gave a bump up of nearly 15-20%, and today it has started correcting back. So I don't want to get into such kind of counters. It would be too risky to deal with such kind of volatile counters. It's better to stay away. Rather, you should focus on those stocks. Despite market correcting in last 3-4 days, they have been somehow managed to bucking the trend, like Vedanta that we have talked about, Maruti, which has already corrected a bit and it's now trading around important support level. So we would avoid DHFL as well as Indiabull Housing at current levels.
All right, the other one is Yes Bank. Stock was stable in the first half of the trading session, as you can see, and then it's just a drop, and now trading down by about 4.5%, 217 on that counter, had nudged up to a level of about 222, 223. From there, once again, the weakness gripping investors in this stock, and heavy volumes, about 99 million shares traded on that counter. Yes Bank's performance over the last 12 months split up. The last 3 months performance, that's where most of the pain has come in. In fact, the last 7 days is where much of the pain has been built up into the system. So over the last 12 months, now down 39% for a Yes Bank. Sacchitanand, would you take a trade on Yes Bank?
Well, it's a very similar structure of what we discussed with Sameet, DHFL, and just a replica of what we have seen. Very similar price scale. If you look at the overall formation, I think there is still not any major respite in the stock. And if you look at the overall data, the way it reached below 240, it did manage. It was trying to manage some support around 210, but we have seen even that particular level getting violated. So probably one should wait it out. In fact, even from a pullback scenario, one needs some price confirmation to really conclude as a bounce back, which is still not evident on this particular stock. So I would still not create any fresh long positions out here. And even on the short side, the level of around 195, which is today's low, will be a critical one. So in case if that particular level is reached, then probably we may see a good strong extension of this particular fall towards say 180, 185 very soon. So it's a wait and watch scenario as far as Yes Bank is concerned, and one should wait out for a firm price development, at least on the daily scale.
Okay, some of the stable names and the ones which are bouncing back. Avinash, we've been talking about how quality is taken a beating. In today's session, some of the quality names are making a bit of a comeback. HDFC is up about 3%, Maruti is up about 2.5%, Kotak Bank about 2% as well. There has been a correction in almost all of these. Would you put in fresh money to work right now into these names?
I think names like Kotak Bank and Maruti definitely would inspire confidence. And I think if you look at the balance sheets of both Kotak Bank as well as Maruti, I think very strong operational cash flows generated by Maruti. I think I would definitely look at buying Maruti for a longer term kind of horizon, Neeraj, considering the fact that volume growth still continues to be pretty large. Most of their car models are in demand. There's a waiting period of almost 2 to 3 months for some of their top models. So I think clearly, these companies are definitely well positioned to put up stronger set of numbers, not only for Q2, but even FY19 looks a lot stronger. So I would believe that any weakness should actually be used, by investors to actually build a portfolio of such kind of quality stocks. Instead of the mid caps, the large caps definitely give a better sense of comfort.
All right. Would you do anything in the metal SPAC, Sameet? Particularly the likes of maybe a Jindal Steel or a Tata Steel?
Yes, I've already recommended one stock, Vedanta, from this space, but as you pointed out, Tata Steel, Jindal Steel, they have corrected a bit in last 3-4 days and they are trading around important support level. So out of these two stocks, I would certainly go with Tata Steel, which has corrected and has now found some kind of support around 580, which was the earlier breakout point. the stock has given sharp recovery from its lower level. So I would expect Tata Steel to continue its upward move, wherein 620, 622, these are the next level to watch out for. So probably in 3-4 days we could see a decent bounce back coming in Tata Steel. So one can go long at current level, keep a stop loss below today's low, which is around 580, and expect a move towards 622 and 628.
Sugar stocks seem to be the flavor of the afternoon. Most of them up and about. Bajaj Hindustan is now up about 6%. Berhampur Chini is up about 4.5%. Dhampur Sugar, Mavana Sugar, should pull that up. Dhampur is up about 5.5%. So last few days, actually, last 2 days, you did see the overall market mood having its own way down on some of these sugar names as well, which up until the ethanol news had been buzzing with excitement. But once again, these stocks have started to look a little bit appealing to the investor community, and you're seeing the pricing activity on that show up today. Avinash, will you do anything here?
I would not look at sugar companies, Devina, for the simple reason that earnings growth has been pretty weak for these companies. The only sweetener for them has been the ethanol kind of trigger, and I think unless and until we see some sort of clear visibility on that front, it would be difficult to take a call, because most of these companies have actually not delivered on the earnings side, at least for the last 2 to 3 quarters. So I would believe that it's better to wait and watch for at least 1 or 2 quarters before we see some sort of earnings visibility from the ethanol business side, and then one could take a call, but not at the current level.
Would the same call be on Praj as well? They have received orders from sugar companies for the ethanol construction. I think
Praj definitely would be better positioned. I think if you look at Praj, they have been market leaders in ethanol machinery. So I think Praj definitely could possibly, in fact the stock has been beaten down, Neeraj, from a pretty high level. So I would believe that somebody who's got a high risk appetite and is willing to ride the earning cycle purely from the ethanol business and probably give a time period of at least 6 to 12 months could definitely chip in at the current odd level.
Okay. Can I just kind of rewind back and go to a couple of stocks on the trade side before we take in maybe an individual idea from Avinash. One of them, we got a fundamental perspective, didn't get a technical perspective on Jet Airways. Sacchitanand, would you go out and trade Jet at these levels?
Well, the structure clearly has been negative, and in fact there has really not been any respite on the counter. In fact, given a choice, I think the bias has been negative, and we would continue to prefer shorting this particular counter. But bounce back is something that could be awaited. I think somewhere close to 200, 204 could be an ideal level where fresh shorts can be initiated. Stop loss for the trade should be kept around 210, and what we are expecting is that this particular move can extend right up to say 173, 174. So probably yes, but on a bounce back somewhere close to 200, 204.
Bit of a bounce in the index as well, by the way, above 11,000 yet again. We're just bobbing around this 11,000 mark right now in that range. The Nifty Bank about 200 points, and stocks which have led this bounce, Indiabulls Real Estate is up almost 10% from the levels that it was at about 2 p.m. So sharp uptick for Indiabulls Housing, excuse me, not Indiabulls Real Estate. Indiabulls Housing has recovered quite a bit of lost ground from the levels that it was at. Bharti Airtel has had some gains. It is now in the green. Kotak Bank has had some gains. It's up about 2.5% from the lows. So that stock too has inched up and trading in the high point of the day. Also, stocks like ITC have seen some uptick in the last few minutes of trade. So a few names which are trying to move up and helping the index do well. Anything on the Nifty Bank, Sameet, Chavan, that you would do now? I know we started off asking about the index at the start of the show. The Nifty Bank, 200 points, a bit of a pullback. Would you use this to either create a short or anything else?
See, Neeraj, if you see the India VIX has already risen quite a lot in last 3 days, and that's the reason you are seeing volatility in the market. So at this juncture, if you have to play indices, it's better to go with the option segment. So I had recommended 11,000 call for Nifty, which was trading around 60, 62, which has already appreciated quite a bit. So if I have to play Bank Nifty also, I would rather look to play with the call segment in that 25-200, which is at the money call. One can go long at current level also, which is quoting somewhere around somewhere around 230. So one can go long in this call option, keeping a stop loss somewhere around 130, which is 100 points from current level. And I would expect this bounce back to continue in Bank Nifty also, somewhere around 25,400 and 25,500. So in that case, this call option can give a decent appreciation, at least
Sameet,
toward 320 to 360.
Sameet, sorry, I missed out. What strike call were you talking about?
For Bank Nifty, it would be 25,200 call option, which is trading somewhere around 220, 210.
Okay.
All right, got that. I just want to quickly pull up, the Nifty point contributors right now before we go ahead and take a check on whether the market breadth has improved as well. So while the advanced decline ratio was, significantly in favor of the bears the start of the show, that sort of has started to come off. So that's the point contribution right now, and you can see the complete tilt. So you've got an HDFC Bank, Kotak Mahindra Bank, financials leading the way on the top, and the heavyweights, the cuts are not as exaggerated. So probably that is also lending a little bit of a fillip to the kind of a reversal that the index has seen. So Reliance Industries is just cutting about 8 odd points on the index. Indiabulls Housing, though in percentage terms, it's also recovered about 10 odd percent, but it's not a heavy weighted stock on the index, so may not weigh down that much on the Nifty move as such. And Yes Bank just contributes about 4 or 5 points on the downside. The market breadth will come up on your screens. Just a quick look at advanced decline. I believe there are about 1,092 stocks in the red versus about 482 stocks. So 1:2 still in favor of the declines. That seems to be, probably you could see the last half an hour moving on the positive side.
Yes, indeed. Sacchitanand, come in as well. The Nifty at 11,031. Well, seemingly we are defending that 11,000 strike quite comfortably. Would you do anything here on the index? A lot of people wanting to trade from an expiry perspective. I believe it's difficult to give levels there, but would you initiate any trades from that perspective?
Well, Neeraj, in fact, at the beginning of the show, we did discuss about Bank Nifty, and we have highlighted this level of around 25,255 on the futures. As I think the market is trading near to that. Stop loss can be placed at around 25,130 on Bank Nifty, and I think long positions can be initiated here. What we are expecting is that this particular bounce back could be very sharp. So I think immediately we may see 25,530. Kind of levels, coming up probably tomorrow or so. So I think the level has been triggered, and I think long positions can be initiated in Bank Nifty rather than Nifty.
Should quickly put up the RSI also of the Bank Nifty, because up until yesterday we were talking about how it's heavily oversold already. It touched a level of 20, which on the RSI, which it had not done over the last decade, since 2008. So that's the Bank Nifty. Just a slight bit of a recovery on the RSI as well, but we'll keep a close eye out on that one.
Interesting. Avinash, before we let you go, busy afternoon of trade. We've asked you about a lot of large caps that you would put your money on. Any NBFC that you believe has priced in the negatives of maybe the ALM mismatch, higher cost of funding, and the impact on NIMs already by virtue of the fall?
No, I think I would still bet on the quality names like Bajaj Finance. I think despite the fact that this area is going to be extremely volatile as we go forward, I think clearly both on the assets and the liability, maturity side, this company is well positioned. I think they have a very strong balance sheet, and I think the kind of segments they operate, Neeraj, I would believe that this is one stock where possibly one could take a longer term view comfortably and expect this stock to actually reward an investor over the longer term. So I think unless a investor has a very short perspective, I think one should not enter the stock. But longer term, I think one could definitely expect a decent risk reward.
All right, Bajaj Finance is a quality name that Avinash prefers. Thanks very much, Avinash. Really appreciate you taking out the time. Well, on that note,
I don't know, Devina, just before we take that break, I don't know if there are some factors to this. Would it be the LIC chairman's assurance that
let's trigger this
all will be well? Yeah, there are also reports about how some of the NBFCs have successfully raised commercial papers at rates which are not exorbitantly high. So I don't know if a couple of these things would be leading to some bit of fuel to the bull's ammo. Keep in mind, Brent though has crossed the 82 mark as well. So
and it's interesting to see because ILNFS on September 30th they have some payouts to make. So whether they actually can manage to do that or not, because they've already missed out on 5. Let's see whether there's more.
Yeah, but LIC's assurance should be good. Anyway, Jess, we need to really quickly slip into a break. Come back, talk about the Fab 4 stocks of the day, get you what dealing rooms are recommending in the session today, and some closing strategies from both Sacchitanand as well as Sameet Chavan.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
When I started juicing to bounce back from a serious injury, I had no idea that it would turn into a passion, that would turn into a brand that provides healthy choices to millions of consumers. Today, my brand is a household name. I am Anuj Rakhian, and my story is a clean and a flavorful one. I'm the raw pressery guy, and I'm here to tell you my story only on Aegon's of Business.
Aegon's of Business never stop. Only on Bloomberg Quint.
Hi, I'm Jatin Khimani. I'll be at Investors Carnival this year talking about the art of selling stocks. Watch me on Bloomberg Quint.
Welcome back. 24 minutes left to go for market closing, and what a reversal it has been for the markets. A complete U-turn, from the grips of the bears, the bulls taking charge right now. Nifty 50 at 11,063. So those crucial levels are being defended by the bulls, up almost 1%. Now that's the highest point of the day for the indices. The banks have seen a reversal as well, so the bank Nifty will give you a clearer picture. 1.2% up now for the bank Nifty, 25,278. And like Sacchitanand highlighted, you can go ahead and initiate long positions at these current levels as well. So 300 points uptick on the index. But let's talk about those Fab 4 stocks that we get you on a daily basis. Yash Upadhyay is here with his list today. Yash.
Good afternoon, Devina. So the first stock on my list is Podar Housing, and that one's up about 7% at the time after the company announced that its subsidiary has acquired about 102.5-acre land in Pune from Autoline Industries. Now the company is proposing to build an affordable housing project on this land with a potential development area of about 8 million square feet over the next 10 years. The move is also a positive as it helps expand their geographical reach in the Tier 2 cities. Infosys is up about 1.5% today after the company received a big 450 crore order for the development and improving the procurement process from one of the Canadian firms. Sugar stocks are in focus. Our sugar, that one's locked in an upper circuit by the way of 10% ahead of the government meet tomorrow. What's on the cards is the government likely to announce a minimum export quota of 5 million tons and export subsidies to the tune of 4,500 crores. So watch out for that one. And the last stock I want to highlight is ICICI Lombard. That one's up about 2.5%. It saw a big cut yesterday of over 8% and has recovered from that move of yesterday. Also, volumes coming in significantly higher, over 8 times the 20-day average. Back to you.
Interesting. Wow. Well, watch out for these names. Thanks a lot for that, Yash. Just now we kind of about 1% higher, and that's about it. No other deviations that are coming in. But the losers have recouped some of the losses as well. Yes Bank is now down just about 3.5% odd. Indiabulls Housing though continues to stay under pressure. Adani Ports just about 2.5%. It was down about 5% at a point of time. So some of those losing stocks are recovering a little bit of lost ground. Lancelot, you can now Value X joins us right now on the show. Lancelot, good having you. Thanks so much for joining in. What have you been doing? Selectively buying into specific losers, or are you still holding your gunpowder dry?
No, I have been buying, and I think while there has been an issue maybe relating to some of the NBFCs, I think that the life insurance companies, all the prices sank along with the NBFCs, and even a couple of good banks and housing finance companies have been, attractively priced. For example, HDFC was in the morning around 1720, 1730 levels. Attractive opportunity to buy a good solid company. Similarly, when you looked at HDFC Standard Life Insurance, SBI Life, ICICI Pru Life, these are all long-term sustainable businesses. So I think these dips provide an opportunity for long-term investors to accumulate some of these stocks. And while they might even go down further, because it all depends on how the market is, I think the business proposition is fairly robust as far as the life insurance companies are concerned, and you will see growth, and then thereafter the prices will get re-rated to reflect that growth. So I've been pretty bullish as far as the life insurance and a couple of finance companies.
Okay, let's not stay on. Time for our chart of the day segment. And Agam Vakil joins in. Remember, the past week has been a week of deep cuts for the Nifty 500, with the benchmark index falling about 5%. And while the drop in broad-based companies are there are some counters that have managed to buck the trend. So what do analysts have to say about these stocks, and what are the target prices for some of these? Agam's here with the details. Now, Agam, what are the counters and what's the difference with the target prices?
Sure, Neeraj. So we have seen about a 5% cut when it comes to the NSE 500 over the past 1 week or so, and there are a handful of counters out there which have actually outperformed and will perform slightly better than the NSE 500 index. Moreover, when it comes to the return potential at this point in time, that indicates a substantial down move. So I took a handful of stocks out there which had a negative return potential of over 10%. Some of these, of course, include the likes of something like a Wipro or TCS, Bata, Alembic Pharma, or for that matter, Page Industries. All of these are indicating a decline of 10% based on the Bloomberg consensus price targets. And for this, I have taken only those stocks which have had analysts of more than 5. And that said, I've also taken stocks only those which have actually outperformed, or should I say have declined less than the NSE 500. So the question really now is that, should we see a further correction? Can these stocks then correct and fall as well, considering their relative outperformance? That's the question we have in the chart of the day today.
All right, Agam, thanks very much for that. So that's a quick look at a few stocks. But moving back to our discussion on the markets, Lancelot, what are the kind of stocks that you're looking at currently? I mean, it is a volatile market, so you have to be a little bit choosy. But where is it that you feel that you can put your money now?
So I think one has to look at this in the light of two things. One was that a lot of the NBFC stocks that we were looking at were highly valued, and they were trading at almost 5 times, 9 times book value. And now with the kind of scenario that we see evolving on the credit markets, I think these stocks will get re-rated downwards. So even if there's an improvement in the earnings, or the earnings continue to grow, we may not see these stocks go back to those levels where they'll start trading at 9 times price to book or 5 times price to book. So I think some of these stocks, like maybe Bajaj Finance, Growth Finance, they were trading at very high multiples. We've seen those come off, and they need to come off a lot further before they can really become attractive buys. So these are ones which we need to stay away. But I think the life insurance companies, like as I was saying earlier, they afford a good opportunity because they have corrected significantly and now are trading at reasonable valuations. And given this the valuation re-rating, you should see these stocks bounce back over the next couple of quarters. So those are something which we are looking at. I think the other areas where I need to see maybe a bit more correction before one can buy are the FMCG and the consumer discretionary stocks, because they had run up quite a bit. Again, they were highly valued. So you saw Hindustan Lever, Britannia, Nestle, all these companies trading at 70, 80 times earnings. Now, if that corrects, and they start getting re-rated at maybe around 35, 40 times earnings, which has been their average multiple over the last 5 years, then one would look at those as well. I think pharma also provides an attractive investment option. If there is a little bit of correction, or even considering the correction that we've seen, pharma should benefit as far as their overseas business is concerned because of the depreciation of the rupee, and that is
okay. Okay, Lancelot, stay on. It'll be important to get in word from dealing rooms, and it's best to get in Dilip Bhatt from Pradas Leela. He joins us right now on the phone line. Dilip, good having you. Thanks much for joining in. There's a bit of a pullback or a bit of short covering move in the market. Would you reckon the LIC chairman's comments about supporting IL&FS at any cost, plus the fact that a couple of NBFCs, or at least one NBFC, seems to have raised funds at commercial paper rates which are fairly attractive, is leading to this?
Absolutely. I think that one statement of LIC chairman really assuaged the market fears, and I think it was giving a lot more comfort and confidence that they said that he said two things. One, it will not allow IL&FS to collapse, which would have had a huge contagion impact. And second, they are looking to increase the stake in IL&FS. I think both are very confidence-inspiring words. I hope it gets translated into action also. And I think market requires some kind of moral support, some kind of support coming from the government and from the authorities. Because the way some of these NBFCs have reaffirmed their rating, that we thought should have given a confidence. But I think market was still very apprehensive the way it really sold off, especially some of these names.
Mr. Bhatt, just to get your sense, up until now, everyone believed that the markets had overshot its growth potential, and there were stretches in terms of valuations across the board. With this news, there has been a slight fillip, but is this just temporary? And the pain that we saw over the last 3 or 4 trading sessions, which has brought the market down about 6-7% from its recent highs, that's likely to stay?
Well, what happened in the last 3-4 days of the panic and the carnage that followed, you can make two sense out of this. One is, apparently, things are not all that smooth, but still there is nothing to panic about, which is what was clearly coming out. But second is, despite all this and despite some of the measures taken by some of these companies, market was selling off. So possibly market was telling us there is something more to it, and market knows better. And market in its collective wisdom generally knows much better than one individual or any other individual. So I think that is how the interpretation has been. I am slightly of the opinion that possibly the panic is going to be behind us sooner than later. But still, the volatility is going to stay. So if you ask me, markets can come up by another 100, 150 points, Nifty, even from the current levels. Again, not impossible to imagine, because panic will take some time to settle down and confidence will gradually re-emerge. And that's what we think, how the markets are going to gradually recover from this panic.
I mean, the panic also is for investors looking at their bleeding portfolios over the last 3 or 4 trading sessions. And there are second thoughts of whether to rejig them, just stay in, average out what's there in their portfolio. So what kind of a strategies does one adopt right now?
So, well, some of the very good names have really gone down by 25-30% across. Some may have gone down by 15-20%. I think one cannot say that this panic has been a little more selective. It has been, in a way, rather indiscriminate in its approach towards the stock price cut that we have seen. So in this scenario, I think it's better that some of the names which have come off by 15, 20, 25%, and possibly one was thinking that they appear to be good, I think one should acquire them. I mean, I would say that something like Mahindra and M&M Finance, that looks good. I think M&M itself also has come off quite a bit. Maruti has come off quite a bit. So I would say that as a first step, one should stick around with the known names at the moment and try to see that the next ride they possibly will be able to cash in on that particular frontline stocks.
Dilip, thank you so much. Wanted to get a mood check at the dealing room. Great having you. Look forward to seeing you in person soon.
Thank you so much. Always a pleasure.
That's Dilip Bhatta from the Prabhudas Liyadar dealing room, talking about there being some bit of buy calls being given out to key clients as well. Okay, time now to take it what other dealing rooms are saying as well. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Neeraj, so as far as the trade setup is concerned, yesterday also we were talking about how 11,000 is a very crucial mark and the dealing rooms are quite hopeful that once we close about the 11,000 mark on the Nifty, probably we could see some bounce back, which is already happening in the marketplace. So 11,000 is something which the bulls are defending at this point in time, and they have been successful to a bigger tune. Private sector banks are leading, in terms of the bounce back that we are looking at. Most of the housing finance companies, also ex-Diwan Housing, have been bouncing quite sharply from the day's low. So dealers in terms of strategy are recommending buying private sector banks, but with strict stop losses. That is something we need to keep in the mind. Other pack is sugar. Remember, we also have the government which will probably look at a relief package and would soon approve it. And on the back of that news flows, dealers are recommending a buy on most of the sugar stocks. So we have a Dhampur and Balrampur, which have been the favorites as far as dealing rooms are concerned. And finally, in the private sector banks, Kotak and Axis, these are the two banking names wherein dealers have built some long positions. In fact, they are recommending a BTST, which is a buy today, sell tomorrow kind of a strategy in these two names in particular. But Darshan has a few more stocks to talk about.
Yeah, so if you're looking at it, one of the stocks that's been spoken about is Page Industries, no doubt. It has rebounded significantly from the lows of the day, but nevertheless some of the dealing rooms that I spoke to do indicate that some of the clients are now wary of valuations, given the fact that the markets are not supporting. The bounce back has come in right now, but through the day the market was rather weak in trade. Pharma as a pack is seeing a little bit of accumulation. Both of them, Aurobindo Pharma and Biocon, are seeing decent accumulation. Some of the select domestic mutual funds are actively accumulating, and DLF was down 10% at one point of time. It's managed to recover significantly from the lows of the day, but nevertheless, given the weak setup as far as the market is concerned, dealers believe that there could be more potential downside on the counter going ahead.
Interesting. Thanks a lot for that, Darshan. Thanks for putting that into perspective. So there's a few stocks that you should watch out for. Closing strategies first before we get in some individual fundamental ideas to Sacchitanand. And Sameet, both of you actually great calling on the Nifty Bank at those levels, substantially above those levels. But what's a good closing strategy, either on the index or on specific stocks? Sacchitanand, let's start with you first.
Well, I will stick with the quality. In fact, right now, if you look at the pharma space, this is one space which has been sustainable, and even right now, Biocon still looks like a streaming buy. It is quoting at around 703. What we're expecting is that this particular move it looks like a fresh breakout, and the extension could come right up to say 738, 739 levels. Long positions should be added in Biocon. Stop loss for the trade could be kept at around 691 on a closing basis.
What about you, Sameet?
See, I had recommended Nifty 11,000 calls, somewhere around 62. It has already appreciated, doubled. but still, I'm inclined to, carry forward this particular strike, and probably tomorrow we'll see, Nifty testing 11,100 or 11,150 also. So it makes sense, carry forwarding this particular strike at current level, 11,000 call option. Apart from this, as well as, individual stock side is concerned, we have been quite a bit on metal space. So Vedanta, Tata Steel, these have been our preferred picks. But apart from this, Hindustan Zinc and Hindalco, both are on the verge of a breakout now. So as far as Zinc is concerned, clearly the stock is, giving sharp move with substantial rise in volume. So we are anticipating this breakout to happen beyond 306 probably tomorrow. So one can go long in Hindustan Zinc. Our positional target would be around 326. It can be bought with a stop loss of 291.
Right. Gentlemen, just stay on. I'm just going to quickly take some viewer queries at this point. Two stocks we need views on. One is Sterlite Technologies and the other is IDFC. I'll come for Sterlite Technologies to you, Sameet, and then IDFC to Sacchitanand.
See, as far as Sterlite Technology is concerned, the stock has been consolidating with a gradual negative bias in last 3-4 weeks. It is now nearing its important support levels. So if the viewer has this particular stock in his portfolio, then it's a stay put since the stock is trading around its important support level. So 310 is the level to watch out for. So if it's holding long positions, keep a stop loss below 310. And once the stock surpasses 330, and if there is an increase in volumes, then we could see the stock again rebounding toward 350, 360.
Sacchitanand, IDFC?
Well, IDFC Limited still, does not qualify as a buy, as per the parameters that we see. In fact, the way it has been collapsing from the levels around 65, the immediate support which we look at is around 34. Now, this particular level has been maintained for almost, since this particular stock has been trading since 2011 probably. And, if you look at the entire structure, the structure still has been weak. So probably if the person is ready to hold for a 15% decline, I would recommend him to hold on to this to counter. But I think, giving a trading fact that the stock is in a bearish trend, I would recommend him to exit the counter at 42 and probably buy back somewhere closer to the support around 35.
Interesting. Okay, so those are some ideas. Lancelot, before we let you go, two large financial names, and wondering if you would be comfortable putting your money to work in any of those, and one versus the other if you can. HDFC versus a Kotak Bank, not HDFC Bank, HDFC versus a Kotak Bank.
Well, I think HDFC Bank would be a better option to buy at this point in time, because Kotak Bank is trading at a high price to book multiple, and you might see growth slow down a bit in Kotak Bank. Whereas in HDFC Bank, I think if you take out the valuation of all the subsidiaries, it is trading at probably around 1 to 1.5 times book value. So there is also some more unlocking to come in HDFC Limited in the form of some of the other businesses that we will see them look to list. And I think given their focus now in the last year on the affordable housing segment, we will see some growth both in margins as well as in assets coming from that space. Plus, I would tend to think that HDFC Limited is one of the best managers on the liability side. So it has borrowings from retail investors. It has from global. It has raised money at very low rates from global institutions, as well as from the bonds and the money markets. So I think from a liability aspect also, they've been sufficiently well geared, and their sources of fundings are well diversified. So I would go with HDFC Limited. Even at these levels, one should buy into the stock and hold it for the next 2 to 3 years.
All right, Lancelot, we leave it at that. Thanks very much for joining us and sharing your opinion on the show. But we've got just about 3 minutes left to go for market closing. Neeraj is here with a quick wrap on what's moving around on the index. Neeraj.
Well, about 1% for the index, 1.5% for the Nifty Bank. It's been a strong show, to be honest, for our markets. Good going, really, for the large caps. The mid caps, wonder if they have bounced back a little bit. They would have bounced back a little bit for sure, but how much is the question? So mid cap index ending in the green, that's a sharp up move. The small cap index, which was down about a couple of percentage points, up about just down about 1%. The sharp bounce across the indices, I think about 1% for almost all of the indices in the session today. The market breadth would have improved, but maybe not in favor of the bulls as yet, or favor of the advances as yet. However, we'll talk about that in a bit. First, the large cap movers and financials dotting the screen there. Kotak Bank, HDFC, Axis Bank right up there. Then come the defensive names, the likes of Lupin, HUL, Sun Pharma, Maruti and SBI from the rate-sensitive pack too have done rather well. What about losers? This one actually succumbed to some bit of selling despite the markets improving. Some pressures there. Bharti Infra down about 3%, but aside of that, and Yes Bank down about 2%, but that too recovered quite a bit of lost ground. There aren't too many big cuts for the rate sensitives. This is quite a different day compared to what was the case in trade yesterday. But interestingly, Indiabulls Housing Finance grinds lower. What about the broader markets, to Devina? Maybe a little bit of recovery on the market breadth, but not too convincing, I guess.
Well, absolutely, Neeraj. I mean, the way that the larger index actually managed to take a U-turn and show some bit of semblance, the broader markets probably didn't do as much. The mid-cap as well as the small-cap indices towards the end of the trading session finally managing to end shut shop in the green by about 0.25%. The advanced decline ratio also improved from 1:2 earlier on. But we'll get to that in a bit. Let's talk about the moving parts in the broader market. And first we talk about the losers. The biggest loser there being Dewan Housing Finance, though not at the intraday low. It was down almost 30% in intraday trade, finally shutting shop around 22% with the 22% cut. IFCI is the other one that moves towards a lower close, 10% given up on IFCI. Jet Airways, remember we've been talking about how this stock has been completely trashed within the aviation basket. Similar pressures being weighed down with higher crude prices. The depreciating currency weighs its pressure across the board for even an Interglobe and a SpiceJet, but Jet Airways seeing more pressure. Bakrangi, Indian Bank, Canfin Homes, Future Retail, BEML, these are all the stocks that have witnessed heavy cuts in trade this afternoon. Among some of the gainers, the sugar pack was very active with gains closer to about 7 to 8%. Bajaj Hindustan by the end of trade was up 10%. You have a Berhampur Chini also which did well. From the defensive space, a Biocon right from the word go was a positive start, and towards the end of trade ending with gains at the highest point of the day, 6% higher for Biocon. IL&FS Transport, ICICI Prudential, you've got United Breweries and M&M Financials, some of the other names that stood tall in today's session, but not a bad closing at all. A 1% bump up on the index after being down closer to 1%.
Yeah, if we can have the VIX as well just for a moment and just see if there was a pullback in the volatility index to the India VIX. Yes, indeed, a bit of a pullback for sure. The last few days it's been rearing up. I think in today's session too started off higher, but a bit of a pullback.
17.5, I think.
Yeah.
And like Agam was highlighting, it was like a 7-month high for the VIX.
Yeah, so a bit of a pullback for VIX today. Now, the volumes and the market breadth, if both of them could come up on your screen, the green screen for the large cap indices, but the volumes and the market breadth would be interesting to see. What's happened on the cash market and the F&O volumes? Well, boy, the cash market volumes are rip and roaring almost every single day. This is 46,000 crores again, way higher. The F&O volume expiry week higher.
It was, but I believe when you took a check at 3 o'clock, it was trading somewhere around this mark itself. So the last half an hour actually didn't see too much of an addition, which is actually a surprise. But yeah, like you mentioned, the NSE cash last 3 days have been seeing a continuous increment in volume. So Friday saw 64,000, yesterday saw 41, and today 45. So not bad.
Yeah, well, interesting in the market breadth. Let's see if there was a definitive pullback. Yes, just about 2:3 in favor of the declines. That's not too bad considering the gap that we had somewhere around here. So two pullbacks that we saw today in market breadth, Devina. Interesting, one somewhere around about 11 a.m. and now during the close of trade.
And also, let's quickly look at what's the point contribution that came about on the index. So like we took a check earlier on, it was Reliance Industries which was the top loser there. Towards the end of trade, obviously that too moved across on the other side, but the key gainers, the key contributors, the heavyweights, the HDFC Bank contributing 14 points, HDFC Limited contributing 23 points, and clearly it was a financial-led run-up for the index.
Yeah, so a great day for great afternoon for markets which were plagued down. I think the LIC chairman statement doing the trick. Anyways, final thoughts from our experts. Sameet, how does this set us up for the expiry?
No, looks good. We have been talking about the 11,000 strike, the tussle between calls and puts. So it seems that today at least the bulls have won this battle. Now the next level to watch out for would be on 11,100. So if we see any kind of unwinding in 11,100 call today, so we might see this expiry happening beyond 11,100 also.
Sacchitanand, what would your view be?
Well, I think very much similar. In fact, the respite has been decent enough, given the fact that after 5 days of a straight decline, market has seen some green and it has sustained well. On a closing basis, if you look at the formation, it looks like a bullish Harami kind of a formation, but the confirmation could set in tomorrow's session in case if we have another green closing. So, from an expiry perspective, I think 11,155, 160 could be an interesting zone. And in case if we have a sustainable move in tomorrow's session, then I think the market is looking at an expiry somewhere close to 11,100, 150 kind of a zone itself. But this particular move you would clearly qualify as a pullback, as the main or the major structure for the indices have been weak. So probably this is just a bounce back, and this particular bounce back may fizzle out post the expiry.
All right, just to bounce back. Gentlemen, thanks very much for joining us. Really appreciate you taking out the time. Sacchitanand and Sameet, we'll leave it at that. Well, interesting afternoon. We had, a complete U-turn and reversal from the lows of the day towards the highs of the day.
Yep, and hopefully, from a bull's perspective, this momentum continues. So it'll be very interesting expiry too. But for now, wrap it up on this leg of countdown from Devina and me and the team that put this show together. Thank you so much for watching.